everybody. This is Chris with Capewell Cap for the professionals video afternoon update on August 4th on Friday here. So we are having a little bit of a fade right now into the close. The looks like on the left side, for example, the NASDAQ will not capture its 20 period moving average. And I'll go ahead and actually I'll remove this Bollinger Band to make it a little bit easier to read. Right here. So this green line, excuse me, this blue line is the 20 period moving average. It's at the center of these ATR bands right here. And it looks like we're not going to close above it. This would be the third close in a row below the 20 period EMA. The MACD is making new lows. This custom indicator based on the Williams %R is making new lows. The negative ADX looks like it's going to cross above here, the positive ADX. Same with the RSI. The RSI is below its 21 period average, coming down. We haven't seen readings below 50 in a long, long time. So caution is advised here. We're breaking this uptrend. Maybe it goes sideways, but that doesn't mean that it soars higher. This could mean that it goes sideways and there's a shakeout. Nobody has any fun. People are losing money. And then there's just some volatility into the end of the year. AMD here is having a bit of a fade. As I mentioned earlier today, we do not want to chase here, and we are just looking to get in at the best entry point. We love the setup because the oscillators here are all red and they're about to flip green. The fast MACD here is flipping green. The regular MACD histogram flipping green. This is a custom Capewell oscillator, also flipping green. This one here is the Lazy Bear squeeze momentum oscillator. Look how tight that is. Look how narrow that is. We're in a squeeze. It's breaking up. The RSI as well is breaking up above its average. Very bullish, but it's up over 3%. There's a fade. And what we want to see next week at some point is a red day where we can buy on a stop at the high of the red day, or some contraction, some narrow action here. And following this, we have the put-call ratio in this upper left corner right here. We can see that this high in the put-call ratio, and I'll just, here we have the E-mini S&P, which is the S&P 500. We look here, the put-call ratio is the highest it was back in January at the new year. This was the bottom of the market. And then the put-call ratio comes down, the market rises up. You can compare the put-call ratio in the upper left to down here is the E-mini S&P, S&P 500 E-minis. We come down, put-call ratio rises back up, market goes back down. And now ever since then in March, the put-call ratio has been going down, 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 down. And it gets to these oversold levels that we have not seen since the bear market top here. Look at how low we are, and we haven't seen these really ebullient levels in the put call ratio since November 2022 or 2021, December 2021. This is the depths of the bear market here. And so this is bearish because everybody, as you know, is long calls and nobody really has puts. This is turning up. So this is to be respected. Now, it's possible that the market goes sideways and the put call ratio resets without the market falling apart. But we do need to respect the fact that the put call ratio is just extremely overbought here. And this is indicative of at least a short-term and medium-term top. So we just need to respect what can go on. And especially since we have this fade, just look how ugly this fade is. Like the bulls just couldn't keep it. It's going to be the third close also for the E-mini S&Ps below that 20 period EMA. That is bad because this trend line is going to be broken. And at best, you're hoping for this to go sideways. So you're totally in the hope zone. Now on the right side, we have the VIX. This is a daily chart in the VIX. It is waking up. Above that, we have a weekly chart of the VIX. The weekly VIX is also waking up. We can look here at the MACD histogram on the weekly VIX. It's printed green right here. We can look down below at this squeeze, lazy bear squeeze momentum indicator on the daily VIX, also flipping green. And then here we have the Capewell Capital Oscillator, also flipping green. After being red, the VIX has been going down all since March. So we can see really that this uptrend that has lulled everybody into complacency and has been rip-roaring for 7 months is really showing signs of strain. This VIX is concerning both on the weekly time frame with these oscillators turning up, and on the daily time frame with the oscillators turning up as well, combined with the put-call ratio at extreme levels and the fade that we have here. So we definitely need to exercise extreme caution there. And then on this chart, we have here the TLT-SPY ratio. This is going to be similar to the VIX. Here we have been looked so low. This is a Williams %R oscillator here on this daily time frame with the TLT-SPY ratio. And we have been just riding the bottom of this for so long. We really just need a reset. As this goes up, there is selling pressure on the market. That means that money has been going into bonds when this goes up. This has been down, which means that money has not been going into bonds. US Treasuries, TLT, it's been going into the stock market. And then on the right side here, up top, this is the S&P 500. And then here on the bottom, this is the VIX to the 3-month VIX ratio. The VIX, as you know, is options on 30 days out. The VIX 3 months is options on 90 days out. And so when the VIX 30 days out is more volatile than the VIX 90 days out, that's when you have more short-term volatility. And we see that the moving averages on this are beginning to align to go up. The MACD histogram here on the VIX 30-day to over a VIX 90-day ratio is up. So this means that the short-term volatility expectations are slowly rising. And as we can see, the SPY is selling here. And the put-call ratio, as we spoke about, nothing to love. The VIX, nothing to love. This fade, nothing to love. So even AMD, which was looking very strong, is fading, and now it's up less than 3%, when it was up closer to 4% earlier. Got to respect this. Next week and next month really can see things play out to the downside, and definitely need to exercise caution. But as we know, we buy things that are flipping green at the mean. This is not flipping green at the mean right now. The market, the NASDAQ, the indices, SPY, not flipping green at the mean right now. AMD is flipping green at the mean, but we do have this fade and there's expansion. We don't have an entry. If there is an entry next week on AMD, we're going to love it. But so far we are not. Let's take a quick look at the IWM small caps. Yep, very, very weak. You might even consider a put here, just to watch, to have some exposure in case this continues to go down. But the IWM also does not look inspiring. At best, it's going to go sideways, but it needs to reset these technicals here, as we've spoken about, for things going so well for so long, and we may have reached the end of that road. Okay, that's it for today. Enjoy your weekend, and we will have more of an update next week. Thank you so much. Bye-bye.